twice now where you said investing in the Treasury market right now is nirvana because you can park it
Yeah.
for different amounts of time, different periods of time, and get a very nice clip
Yeah.
of 4 to, well, at the time it was 5%. Where do you still feel the bond market is nirvana?
Liz, I'll tell you, the thing that's pretty extraordinary is today cash-like investments and, things like we're buying commercial paper, 3, 6, 9 month company funding that you can do at 5 1/4, 5 1/2, 5 3/4. Pretty extraordinary in the, not taking interest rate risk because you're talking about 3 month paper, 6 month paper, not taking liquidity risk and it matures quickly. That, I'm going to go back to my Nirvana comment. I forgot about that one. But that is, I don't have to take the data risk or volatility risk. I don't take interest rate risk. Boy, that's pretty exciting. And then, we're starting to take more interest rate exposure in the 10-year point. Like, I think
Really?
now, so if you think about given this credit contraction, you have to assume now that interest rates, 10-year interest rates, are going to be lower than they would have been a month or two ago before you had this sort of financial stress. So I think the 10-year note, if you can buy the 10-year note in the high 3s, that's pretty interesting. The other place, quality income, investment grade credit, agency mortgages.
Well, wait, why not something like the 4-month, okay, the 4-month Treasury T-bill, right?
Great.
I saw it yielding earlier today 4.9%, the 6-month 4.84%, the 3-month 4.7%.
Yeah.
That gives you a little bit of a buffer zone between what's happening with First Republic and the end of the summer.
All day. I mean, they're great. And it's part of why the deposits are flowing out of some of these institutions. Like, boy, maybe I don't want to take the risk. And I could just go into T-bills and sit in T-bills, and we could talk about the debt ceiling, and we could about the others. That being said, T-bills are going to mature, and that's an attractive. You go back a year or so ago, we were buying high yield at 3.5%, single B, double B rated high yield at 3. Now we're buying core bonds. Now we're buying T-bills at close to 5. That is, I wouldn't say it's as exciting as equities can be at times, but it's a great alternative to equities now, and you can sleep at night.
Well, sometimes exciting gives you heart
Totally.
palpitations, right?